Okay, everybody, it is Thursday, March 24th, 2022. I really hope you have a great day today. Sincerely, let's talk, you and me. It's kind of funny what happened this morning. I'm sitting here watching Bloomberg and they're going over the economic news. Let's cover that just real quick. Honestly, it's been years since we've had a single piece of good economic news. The current environment is out of control. Debts and deficits continue to balloon beyond anyone's wildest expectations, and it's going to get a lot worse. You know why. You understand the mechanism behind this. Mortgage demand falling off of a cliff. Real wages based against inflation is plummeting at its fastest pace ever. Speaking about inflation, it is surging. It just doesn't stop. So anyway, we got this durable goods order this morning, which was abysmal. It was the worst report that you possibly could have seen. Meanwhile, we got these first-time unemployment claims numbers, which were apparently the best since 1969. Now, I'm sitting here and I'm watching, again, Bloomberg, and the commentator is looking at the information going, wow, that's a little odd. Yeah, it is a little odd because it's fake. It's all propaganda. It's just nonsense. I think we all know that. Our economy here in the United States and around the world is collapsing at its fastest pace ever, and it will continue to do so as central banks keep the pressure on the middle class. You know that. Everything else is just a distraction. It's misinformation. It's some kind of mechanism to mislead you. And I still feel like I said yesterday in my post-market wrap-up, something's brewing here, okay? We already understand the crisis to crisis to crisis mechanism. And they're going to milk the current crisis just like they milked the last COVID crisis, and they're continuing to milk it. It won't stop. So they have another crisis in store for us, and I think we already understand what it's going to be. You know, that's pretty easy to figure out. I mean, we got obviously an energy crisis. We're in the heart of it right now. Crude oil, right now, WTI crude is $115 a barrel, going much higher. Food shortages, they're coming too. But something else. They're going to throw something else at us soon. I would believe it's going to be relatively soon, that it's going to be big. And it's going to suck other nations into the war, which is going to expand. Again, this is central banks. They got the world by the throat right now, and they're going to continue to push that boot harder into your throat and cut off your freaking air supply. That's the truth. All right, look, let's glance over here at the market. 10-year yield, number one, did come up. We got 2.37 the last time I looked at it. However, as an offset to that, we have a stronger dollar. So there's a little bit of fear here, despite the fact that stock futures are higher, pointing towards a higher open. Trading doesn't start for about 32 minutes. Okay, lovely. And, okay, we'll see how that plays out throughout the day. What else do we got going on? Gold and silver catching a bid this morning. Nothing major, but are higher nonetheless. Look, I don't know about you. All right. But me, I really don't think about the price action of gold and silver. A lot of people write to me every single day. Hey, Greg, the biggest question I get with regard to gold and silver is, okay, when is it going to start taking off? You already should know this if you follow this blog. The price suppression of gold and silver will continue until we get a meltdown in the debt market. It's that simple. Period, the end. So just expect it, welcome it, embrace it, because what that allows you and I to do is buy anti-debt units, that's what they are, at incredibly suppressed prices. And everything is going to normalize, well, if that's the right word, when the debt market implodes. Look, we're in a market here of there's no price discovery anywhere. I don't care what part of the market you want to look at. Because the debt market is being rigged to the highest possible order, and it will continue to do so as the Fed deliberately goes out of its way to create inflation here. Well, nothing is real. Nothing is real at all, but it's going to get very real. You could count on that. So with regard to gold and silver taking off, just sit back and relax, okay? When we get the debt market implosion and cash moves from, cash is going to bleed out of the debt market, rates are going to spike, cash is just going to move. It's going to move in a humongous wave right into commodities, gold and silver especially, because they're massively suppressed. Especially silver, in my view. Other commodities are going to take off as well. And I'm telling you, you need exposure here. I covered this. I've been covering this a lot lately. Look, there's a lot of smart people here. So read the comments. Go to the chat room on my website, traderschoice.net. I recommended ticker PDBC. I've been talking about this for a while now. It's a way to gain exposure to commodities. You got to own oil and gas companies. I've told you this as well. Defense contractors, if you're so inclined. I mean, this is all on my website, all of it. TradersChoice.net. Gregory Mannarino's stock picks. Just look at this stuff. I don't put it there for my own health. I put it there for you. Anyway, Bitcoin around 43,000. Crypto's doing okay. And that's another thing. I've told you how this is going to play out. For those of us here that hold cryptocurrencies, we haven't seen anything yet with regard to gains moving forward. I believe, as I have explained, I'm going to tell you again, that the market capitalization of cryptos is going to balloon when the debt market implodes. You're going to get cash moving into commodities, cash moving into cryptocurrencies as well. So that's what we're doing. All right. That's why I am holding physical gold, physical silver, platinum, palladium, and cryptocurrencies for the debt market implosion. I really don't care at all what these things do in the short run. I don't care at all. All right. I sit back here. I own several core positions, large cap, dividend paying stocks. These companies are paying me to own their stocks. I'm collecting the dividend. At the same time, I'm selling puts against my positions, collecting premium, pretty much all the time. This is how you beat the market from every angle. You understand? And I think you do if you follow this blog. So look, in summary here, we got abysmal economic news yet again. Durable goods orders cratering, absolutely cratering, missing the mark by a huge margin. Then we have this odd outlier of a number here with regard to first-time unemployment claims. It's all fake. It's all fake, okay? And whatever jobs they're adding, obviously with real wages cratering, these people, they're getting destroyed anyway. Oh, yeah, they have a job? Maybe. That's paying them nothing, and on top of that, they're being robbed blind by the current mechanism in surging inflation. Imagine Gregory Mannarino's shock. I've been telling all of you, we're under attack. The real war is on we the people, and it's central banks. People, when do you believe yet again? I'm asking you, and I've asked this repeatedly. The Federal Reserve is going to be held to account. When do you believe one of our loving, caring representatives who only want to hold office for whatever reason is going to hold this institution to account? It's never going to happen, again, because it's a slave planet, slave individuals. We have no representation anymore. And central banks rule the freaking planet. So just get used to it. Nothing matters anymore. Everything else is a freak show. It's theater, and I think you all know that. All right, look, that's pretty much it for this morning. We covered a lot of stuff. Let me know what you think about this stuff as usual. I do read the comments. I may not write back to all the comments, but I look through them and I read the comments. I really do. Anyway, that's it. I'm so out of here. I'll see all of you at the end of the day, and let's see what they throw at us next time. A little nervous about it.